Alright guys, welcome back to the new video. I'm your host Yash from Equity Master, trying to make markets simpler for you. Thank you for tuning in every week. It means a lot. This is actually the last video we filmed for this month. So this week I have a crazy episode for you guys. But before we move on, please note that this video is for information purposes only. It's not a stock recommendation and should not be treated as such. There's no opinion or view on any stock covered herein. With that disclaimer out of the way, let's get started. In today's video, I'm going to be talking about your favorite topic, which is penny stocks. You see, the overall Indian stock market has seen a sharp correction in the past 2 weeks. Investors are getting nervous over concerns of weak economic growth and FII outflows. Concerns over high valuations and earnings misses in some cases has also dampened the overall market sentiment. In fact, the benchmark Nifty 50 index has given no returns since May 2024. The broader markets, mid-caps and small caps have declined too. Some of the stocks from these indexes have crashed badly. The BSE Small Cap Index has corrected around 17% from the top. Another 2-3% correction and it'll enter the bear market territory, which is why investors are looking at beaten down stocks with reasonable valuations and fundamentals that could stage a comeback in 2025. If you are a regular reader of our articles on equitymaster.com, we have written about these beaten down stocks across market caps, small caps, mid caps, and we even covered micro caps. Adding to this list, in today's video, I'm going to be talking about some beaten down penny stocks that are poised for growth in 2025. Penny stocks often attract attention because of their low price, but not all penny stocks are created equal. While some may be speculative and risky, others have strong fundamentals and the potential to deliver solid returns over time. Since there's no definition of penny stocks in India, we at Equity Master define a penny stock as a stock that's trading at a 2-digit price. In other words, a stock that is trading at less than Rs 100 per share. Also, for staying out of illiquid counters, we have put some minimum sales criteria and a minimum liquidity bandwidth as well. We have also put a filter where these companies should have a minimum return on equity, return on capital employed, and reasonable debt to equity parameters. After putting all these filters and running a query on the entire list of stocks, these companies emerge at the top. The first penny stock on this list is Sigachi Industries. The company manufactures microcrystalline cellulose or MCC in 60 distinct grades ranging from 50 microns to 250 microns. Sigachi caters its products to industries including pharma, food, nutraceutical and cosmetic sectors. In financial year 2024, the company enhanced its total installed capacity by 7,200 MTPA, reaching an overall capacity of 21,700 MTPA. The company's stock price currently trades at Rs 46 per share. The stock touched its 52-week high of Rs 96 on 27 February 2024. From the top, the stock price is down more than 50%. In the past 1 year, shares of the company have fallen 43%. Throughout 2024, the company's stock price declined following muted quarterly earnings in the first quarter of financial year 25 and amid challenges in the overall industry. For the first half of financial year 25, the company's margins moderated slightly due to higher fixed costs from the recent capacity expansion which became operational towards the end of second quarter. Nevertheless, the company has decent growth plans in place for staging a comeback. Recently, the company posted its earnings for the third quarter of financial year 24 with its operating income rising 26% year-on-year. Sigachi's net profit for the same quarter grew by 26% year-on-year. The company is currently expanding its footprint in the API segment, focusing on domestic markets and working on obtaining certifications for regulated markets. It is also entering the Middle East market and has acquired 20 acres of Special Economic Zone land in Dahej for developing complex excipients and cross-crystalline sodium. Sigachi's new MCC capacity is expected to reach 50% utilization by the end of this year, with projections of 80 to 90% utilization by the end of financial year 2027. Moving on, the second penny stock on this list is Sathya Industries. Sathya Industries is one of the leading wood and agro-based paper manufacturers in India with a fully integrated manufacturing setup. It supplies paper directly to various state boards, accounting for over 40% of its business. It enjoys a 10 to 12% market share in the state orders. The state orders are tender driven, funded by the government and generate higher margins in comparison to the paper sold in the open markets. The company's stock price currently trades at Rs 86 per share. The stock touched its 52-week high of Rs 143 on 7th July 2024. From the top, the stock price is down 40%. In the past 1 year, shares of the company have fallen around 35%. In the year gone by, the company's performance was impacted by the overall industry dynamics of the paper industry, which is highly cyclical. Paper manufacturers are exposed to volatility in raw material prices and imports. For the first 2 quarters of financial year 25, Satya Industries has posted a steep decline in margins as well as profitability. Nevertheless, it has decent growth levers in place and it's anticipating a favorable demand outlook for paper sector from the education sector. In recent years, Satya's business has expanded significantly. To capitalize on the rising demand and strengthen its market position, Satya has embarked on a strategic mission to invest Rs 350 crores over the next 2 years to enhance production capacity and install a soda recovery boiler. If you don't already know this, the paper industry is highly fragmented with over 750 paper mills in existence, and less than 100 of them have a capacity of more than 50,000 tons per annum, while an even smaller number of firms have a scale and integration that is comparable with that of Satya Industries. Looking ahead, Satya Industries plans to modernize its existing plants and machinery to improve efficiency and production quality. Moving on, the third penny stock on this list is Uday Shivakumar Infra. It's an emerging player in the Indian road construction sector, gaining recognition for its recent involvement in various road projects. The company has been actively bidding for contracts under the Bharatmala Pariyojana and has secured several projects that are crucial to India's road network expansion. Uday Shivakumar Infra constructs roads including state highways, district roads, smart roads under municipal corporation, smart roads under Prime Minister Modi's Smart City Mission, national highways, BBMC and local area roads in taluka places among other things. The company's stock price currently trades at Rs 48 per share. The stock touched its 52-week high of Rs 88 on 25 June 2024. From the top, the stock price is down 45%. In the past 1 year, shares of the company have fallen 5%. The reasons behind this decline are not very hard to guess. The company has failed to live up to expectations and has posted a sharp drop in its earnings for the first 2 quarters of financial year 25. In the second quarter, the company posted a loss of Rs 4.3 crores compared to a profit of Rs 5 crores posted in the same period a year ago. Smaller companies involved in the infra segment typically face intense competition and have to bid aggressively to get contracts. Going forward, Uday Shivakumar Infra is anticipating more orders. As of October 2024, the company has a healthy order book of Rs 1600 crores. These orders are to be executed over the next 2 years. The constant infra projects received from different government departments and agencies have kept its profit metrics intact in the past 5 years. The company will have to live up to its hype and scale up its executing capabilities. Considering the fact that the Indian government wants to massively scale up road construction in the country, we could expect to see some more projects being awarded to Uday Shivakumar Infra. Moving on, the fourth stock on this list is VMS Industries. Incorporated in 1991, VMS Industries is in the business of shipbreaking and trading of ferrous and non-ferrous metals. It's a specialized manufacturer with a focus on constructing advanced missiles and maritime equipment. The company purchases old ships, dismantles them and recovers usable parts while it sells the scrap. Its shipbreaking yard is located along Sosia Belt, which constitutes nearly 90% of India's shipbreaking activities. It is one of the India's largest shipbreaking clusters. The company's current stock price trades at Rs 38 per share. The stock touched its 52-week high of Rs 75 on 31st July 2024. From the top, the stock price is down 49%. In the past 1 year, shares of the company have fallen 10%. This recent decline could be attributed to cyclicality in the ship recycling ecosystem and competition from neighboring countries like Pakistan and Bangladesh. The company's debt has also remained a concern. To address these working capital requirements, the company recently raised funds via rights issue in financial year 24. In financial year 2024, VMS Industries achieved its highest ever annual revenue of Rs 266 crores, marking a significant growth of 90% compared to the year ago period. The company's net profit also increased to 6.3 crores, growing by an impressive 153%. This company could turn out to be a proxy play to India's growing shipbuilding ecosystem. The EU has recently flagged that ships are mandated to be recycled in yards which comply with international standards. VMS Industries is already compliant with all these norms and the company is adopting more environmental friendly practices. While the company looks in a sweet spot right now, one must not forget that the ship recycling industry is cyclical in nature and the supply of old ships for recycling is inversely proportional to freight rates in the global economy. Moving on, the fifth stock on this list is Andhra Sugars. Andhra Sugars is a manufacturer of sugar, industrial alcohol, chlor-alkali products, aspirin, sulfuric acid, liquid and solid propellants among other things. The company also generates power for captive use. Andhra Sugars commenced its operations as a sugar manufacturer back in 1947 and it gradually diversified into other businesses. At present, it has 4 operating divisions with sugar and allied products, chlor-alkali products, industrial chemical liquid propellants and other related products and power generation. The company's stock price currently trades at Rs 83 per share. The stock touched its 52-week high of Rs 129 on 13 June 2024. From the top, the stock price is down 36%. In the past 1 year, shares of the company have fallen around 24%. The sugar industry's cyclical nature has kept the company's stock price under a check at regular intervals. In the first 2 quarters of financial year 2025, the company has posted a decline in margins and profitability. Nevertheless, the company is a niche player diversified by its various offerings. In November 2024, Andhra Sugars received approval from the US FDA for its aspirin manufacturing facility in Andhra Pradesh. It also supplies critical things like solid and liquid rocket propellants for the ISRO. The offtake from ISRO products has been healthy in the recent quarters. With integrated operations and debt metrics in check, Andhra Sugars could possibly make a comeback in 2025 if margins remain in check in the remaining 2 quarters of financial year 2025. Moving on, the sixth stock on this list is Geojit Financial Services. Geojit Financial Services is a prominent investment service provider in India with a growing presence in the Middle East. The company offers a wide range of financial products and services including stock and currency derivatives, portfolio management, mutual funds and insurance, online financial planning and commodity derivatives as well. It also has a strong client relationship in Tier 2 and Tier 3 cities in India. At the current price of Rs 91, Geojit has a market cap of Rs 26 billion. From its peak price of Rs 159 touched on 17 September 2024, the stock price has corrected more than 40%. In recent months, the company's stock price has come under pressure following regulatory changes across trading segments. As Geojit primarily derives its revenue from these segments, investors have started to factor in a possible decline in volume which may typically impact the company's profitability. Nevertheless, Geojit Financial Services recently conducted a rights issue worth Rs 200 crores. In mid-December 2024, the company's board also approved transfer of its security broking business on a slump sale basis to Geojit Investments, its wholly owned subsidiary. Shares of broking firms like Geojit are expected to remain in focus going forward in 2025 in tandem with the activity in the capital markets. Historically, Geojit has focused on the cash segment in the equity market and its dependence on the derivative segment has remained lower compared to other discount brokers. This factor gives the company a unique advantage as and when there's news around the tightening of regulatory framework to curb speculation in trading. In the first half of financial year 2025, the company has reported a net profit of 105 crores compared to a profit of 60 crores in the same period a year ago. Growth was driven by a rise in brokerage income. The company is currently focusing on scaling up its distribution and wealth business. Geojit's strategy includes leveraging advanced technology, platforms such as Flip, TraderX, Smartfolios and Funds Genie, which are designed to cater to diverse customer needs and are scalable to meet evolving demands. Moving on, the seventh penny stock on this list is Ujjivan Small Finance Bank. Ujjivan Small Finance Bank is a mass market focused bank in India catering to financially unserved and undeserved segments and committed to building financial inclusion in the country. The share of micro banking loans forms a large share of the loan book at 70% with 54% of the book being group loans and 16% individual loans. At the current price of Rs 32, Ujjivan Small Finance Bank has a market cap of Rs 63 billion. From its peak price of Rs 61 touched on 8 February 2024, the stock price has corrected around 47%. The major reason behind this decline is attributed to industry-wide slowdown in the microfinance segment. The microfinance industry is witnessing increase in impairment costs due to over-leveraging in unsecured rural lending segment and pressures related to erratic weather, elections and economic uncertainties. This has led to a deterioration in repayment capacities and defaults. Further, the industry is witnessing high attrition rates in ground staff, thus impacting collections. Last week, the company posted its earnings for the third quarter ended December 2024. The Bengaluru-based lender's net profit slumped by 64% year-on-year. The company's net NPAs or bad loans rose to 0.56% against 0.17% in the year-ago period. Nevertheless, the small finance bank is taking various measures to overcome these current challenges. It's gradually expanding into other asset classes and actively exploring opportunities in gold loans, mutual funds, housing loans, and collaboration with fintech firms. The bank has taken a strategic call to slow down disbursements in the microfinance segment in light of the prevailing challenges. For financial year 2025, the bank is focusing on 20% growth in its asset book. It is also targeting a 35% secure book by the end of financial year and is also pursuing a universal bank license. The bank has received approval for the same from its board and will soon move the RBI for transition to a universal license. Ujjivan Small Finance Bank also aims to enhance the quality of its loan book by increasing the proportion of secured loans, recognizing that its current mix leans heavily towards unsecured lending at a ratio of 72% to 28%. In the domain of housing loans, which constitute 15% of the bank's total loan portfolio, a revamped approach is being introduced through a hub-and-spoke model to broaden its customer base. Looking ahead, Ujjivan Small Finance Bank is gearing up to explore mutual fund offerings further with plans underway for potential partnerships in this area. Moving on, the 8th stock on this list is Dwarikesh Sugar Industries. Dwarikesh Sugar Industries is one of India's leading sugar producers. The company is primarily engaged in manufacturing of sugar and its allied products. It has a strong presence in sugar manufacturing, power, ethanol, bioenergy and industrial alcohol. At the current price of Rs 48, Dwarikesh Sugar has a market cap of Rs 9 billion. From its peak price of Rs 89 touched on 7 February 2024, the stock price has corrected nearly 46%. The sugar sector faced multiple headwinds such as the government banning sugar exports, rising prices of sugar, and low sugarcane yields, which led to a fall in the prices of sugar. The stock price of Dwarikesh has also fallen in recent months owing to dampened earnings and a weak demand scenario. In the first two quarters of financial year 2025, Dwarikesh has posted losses. Nevertheless, the company has decent growth plans in place to overcome from the current headwinds. It has already turned around a corner and posted a profit for the third quarter of financial year 2025. In the last 5 years, Dwarikesh Sugar's profit has grown at a compounded annual growth rate of 3%. Adding to the positive sentiment, sugar stocks have started to show some green signs following reports of Indian government likely to take a decision on increasing the minimum support price of sugar. Also, the anticipated increase in the ethanol procurement price is expected to further boost performance. Moving on, the 9th stock on this list is Easy Trip Planners. Easy Trip Planners is one of India's leading online travel agencies. It operates under the brand name Ease My Trip. The company provides end-to-end travel solutions including air tickets, holidays, hotels, packages, rail tickets, bus tickets, and other services. One of the company's key strategies is not to charge convenience fees, setting it apart from other online agencies in the market. The company has been actively acquiring companies to expand its offering and market reach. Some of its recent acquisitions are Spree Hotels, YOLO Bus, Guideline Travels, Trip Shore, and Duk Travels. It has also made investments in companies like Eco Hotels and Resorts and eTrav Technologies. At the current price of Rs 13.7, Ease My Trip has a market capitalization of Rs 49 billion. From its peak price of Rs 27 touched on 8 February 2024, the stock price has corrected 49%. So, why is Easy Trip's share price on a continuous decline despite multiple growth levers in place? Well, the primary reason behind this decline could be promoters selling stake. Shares of the company went in a free fall, crashing up to 20% in a single trading session in December 24 following reports of the company's promoter and co-founder planning to sell his remaining 14.2% stake. This decision came after Nishant Pitti's earlier divestment of a 14% stake in September 2024. Promoters, being closely associated with the company's growth and operations, are seen as key drivers of its vision and strategy. A significant reduction in the stake can raise questions about the long-term stability and governance. It may also indicate potential internal challenges or a lack of enthusiasm about growth opportunities. Days after the reports of the stake sale emerged, Nishant Pitti tweeted on social media platform X that there will be no further stake sale from his end or his promoters in Easy Trip Planners. He said in an interview that the 1.4% stake he sold was due to personal requirements. EaseMyTrip is currently expanding its network of franchise stores across India to enhance its offline presence and cater to customers who prefer offline bookings, particularly for holiday packages. The company's international operations, particularly in Dubai, are also gaining momentum. The company is leveraging its cost-efficient operational model based in India to capture international markets as well. Looking forward, Easy Trip Planners is exploring opportunities in the electric mobility segment through its subsidiary Easy Green Mobility. The company plans to establish a manufacturing facility and invest in research and development over the next 2 to 3 years. Apart from this, aviation traffic is on the rise. This bodes well for the company. Moving on, the last penny stock on this list is HP Adhesives. HP Adhesives manufactures consumer adhesives and sealants such as PVC, ePVC and uPVC solvent cement, synthetic rubber and more products. The company's manufacturing facility is located in Maharashtra and is a multi-product manufacturing facility with a total capacity of 13,500 MTPA. At the current price of Rs 60, HP Adhesives has a market cap of Rs 5.6 billion. From its peak price of Rs 131 touched on 6 February 2024, the stock price has corrected nearly 55%. So what explains this underperformance of HP Adhesives? Well, one reason could be the volatility in crude oil prices. As the company operates in a highly fragmented industry, any sudden price change in crude oil and its derivatives leads to stiff competition. The other reason could be mutual fund selling. After staying put for over a year, fund managers have decided to reduce their holding in the September 2024 quarter, followed by more selling in the December 2024 quarter. So far in financial year 2025, the company's quarterly earning performance has remained in line with expectations with marginal growth compared to the year-ago period. In the past 3 years, the company's sales and net profit have grown at a healthy CAGR of 26% and 27% respectively. HP Adhesives has also reduced its debt following the IPO in 2021 and it's currently a debt-free company. The development of new products would be a key driver for HP Adhesives. In financial year 2024, the company's business had improved significantly following the introduction of new products. So there you go guys, these were some of the beaten down penny stocks with decent fundamentals that are poised for growth in 2025. Here's an image showing all the companies on one page along with the percentage change in the past 1 year. And from the top. After the recent market volatility, first-time investors on Dalal Street are being introduced to the true nature of the stock market. However, volatility is necessary to get to where we are going. Great investors seek out volatility. They understand that asset prices don't go up in a straight line. Take a deep breath guys, as drawdowns are normal. After the massive rally seen in Indian stocks in the past 3 to 4 years, this current one is a drawdown for the ants, and the stock market has already started to recover in the past 2 trading sessions. The key is to be bang on with your stock selection and stock picking, especially if you are dealing with penny stocks. It's equally important to remember that penny stocks are still inherently volatile and aren't immune to market fluctuations, competition, or industry challenges. Investors should do thorough research, check for corporate governance, and consider their own risk tolerance before making any decisions. That's it for today guys. Don't forget to like this video and share it with like-minded investors and make them as smart as you are. Before I sign off, I just wanted to highlight that we have a column called Views on News on our website equitymaster.com. It's a platform that is the best way to support our writing and research. Do check out the vast library of content that we have created over the past 5 years. We have podcasts, free newsletters and so much more. Our goal is to simplify stocks daily so that you can grow 1% each day. So if you are interested, check out that section with the link provided in description below. This is Yash Vora from Equity Master. Thank you for tuning in. Have a good rest of the day and I'll see you in the next video.